Hope everyone is doing well. Okay, for this week, we'd like to go over Chapter 11's Corporate Reporting and Analysis. Okay, start the first one. The first one says here, Noon Incorporated issues 4,000 shares of NOPAR common stock at a cash price of $6 per share. Assuming the stock, though, has a stated value of $1 per share. Well, first thing you always want to record is how much cash you received for it. So it says here, it was for 4,000 shares. Take the 4,000 shares, and you multiply by $6 per share. How much you received? Take 4,000 times 6. So you received $24,000 cash. Okay? And you want to debit cash for $24,000 because that's what you received and your cash is increasing. Now, you might have received $24,000 for it, except it has a stated value of $1 per share. So you want to credit common stock for how much it's worth. So again, take 4,000 shares, multiply by the $1 per share. Okay, so that'll be $4,000. So you want to credit common stock for $4,000. And remember, common stock is an equity account. It increases with a credit. Okay, and then the remainder goes to paid in capital in excess of stated value, common stock. Okay, so it'll be the difference. You can take the 4,000 shares and you multiply by. Now, you sold it for $6 and it was worth $1. Take the difference and multiply by $5. Okay. That'll be $20,000. Then you just want to credit paid in capital in excess of stated value common stock for $20,000. That's also an equity account. The next one now, number 2 says Garb Incorporated issues 5,000 shares of $100 par value preferred stock for cash at $130 per share. So now we have preferred stock. And again, start off by seeing how much cash you received. So that's 5,000 shares. Take 5,000, multiply by $130 per share that you received. Take 5,000 times $130. That'll be $650,000. So again, we're going to debit cash for $650,000 because that's what we received and our cash is increasing. Okay. Now, even though we received cash of $650,000, it said the preferred stock is only worth $100. So you take the 5,000 shares of preferred stock, multiply by $100. Okay. So that will be worth $500,000. Okay. Now, remember, we want to credit preferred stock for $500,000. And again, the remainder goes to paid in capital in excess of par preferred stock. Okay, so again, take the 5,000 shares. We're going to get multiply. Now, you sold it for $130, and they're worth $100. So again, take the difference. 130 minus 100 is $30. If you take the 5,000 times $30, that'll be $150,000. So you want to credit paid in capital in excess of par preferred stock for $150,000. Okay. The next one now, it says here, Osage Corporation issued 2,000 shares of stock. Prepare the entry for the issuance under the following assumptions. Okay. The first one, the stock had a par value of $5 per share. It was issued for a total of $52,000. Okay. So we know this time is given to us. Said you received cash $52,000. So I'm going to start off by debiting cash for $52,000. Now, how much is the common stock worth? Okay. Well, it says here you had 2,000 shares. Take 2,000 shares, and you multiply by, they were each worth $5 per share. So they're actually worth $10,000. So we're going to credit common stock here for $10,000. And then the remainder will go to paid in capital in excess of par common stock. So you take the $52,000 minus the $10,000, that'll be $42,000. All right. Now, with all these, cash will be the same. It's still going to be $2,000. Okay. Except now it says the stock had a stated value of $5 per share. Okay, it's going to be a little bit different. So now it's $5 per share. It's still going to be the same. It's going to be $10,000. Except the only difference now, instead of being paid in capital in excess of par, it'll be paid in capital in excess of stated value common stock. Okay, for the same amount, $42,000. Let's go see now. Now it said the stock had no par or stated value. It was issued for a total of $52,000. So now we have no par and no stated value. So you received $52,000, and because it had no par or stated value, you want to put common stock for the same amount, $52,000. Continue on. Now it said the stock had a par value of $5 per share. It was issued to attorneys for services doing the corporation valued at $52,000. So now it says you used attorneys, so instead of paying them with cash, you paid them with stock. So you're going to debit organization expense for $52,000. Okay. Now common stock, that stays the same. That's still going to stay at $10,000. Okay. And the remainder, it goes to, again, paid in capital in excess of par common stock. If you take the $52,000 minus the $10,000, that'll be $42,000. And the last one says here, the stock had a par value now $5 per share. It was issued for land worth $52,000. So now instead of paying cash for this land, you gave stock. So again, start out by debiting land. Because remember, land is an asset and you acquired it, you want to increase it for $52,000. Okay, common stock stays the same, $10,000. And then again, the paid in capital is a par common stock. If you take the $52,000 minus the $10,000, that'll be $42,000. Number 4 here says, on January 1st, 2014, the stockholder equity section, of course, shows common stock $5, $1,500,000 paid in capital is a par, retained earnings. During the year, the following treasury stock transactions occurred. Okay, so you also have some treasury stock transactions here. So journalize the treasury stock transactions. Now remember, treasury stock is when a company buys its own stock, such as Walmart bought Walmart stock. Okay, so we start with the first one. You said you purchased 50,000 shares for cash at $15 per share. Okay, so let's see how much it's worth. Again, you take 50,000 shares, take 50,000, multiply by $15 per share. Okay, so that'll be $750,000. Okay, and we started by debiting treasury stock for $750,000, and then credit cash $750,000 because, well, you used cash to acquire it. You want to decrease cash. Now it says you sold 10,000 these treasury shares for cash at $17 a share. Okay. Now let's see. Take 10,000 shares. How much cash you received for? Take 10,000 shares and you multiply by $17 per share. Okay. So you received $170,000. I just want to debit that because, well, you received that. Okay, let's continue on the next bar now. Now, how much treasury stock we're going to have? Treasury stock, now we're going to credit it. It says here, again, you take 10,000 shares, and you multiply it by the original price you bought at, which is $15. Take 10,000 times $15. Okay, that'll be $150,000. Remember, this we're going to credit. For $150,000. And the remainder will go to paid in capital from treasury stock. Okay, again here, take 10,000 shares, and you multiply by, if you take the $17 that you received minus the $15 that you sold it at, it'll be multiplied by $2. So that'll be $20,000. You want to credit that for $20,000. Alright, now let's go to September 1st now. It said he sold 8,000 treasury shares for cash at $14 per share. Okay, so again here, take the 8,000 shares, same as cash received, and multiply by the $14 per share. Okay, so that'll be $112,000. Okay, so I'm going to debit cash for $112,000. And the next part, you also want to calculate how much paid in capital you got. Now you lost because you bought them at $15 and you sold them for $14. So you actually lost. So again, take the difference. Take the 8,000 shares and multiply by the dollar, okay, which would be $8,000. Okay, remember now, because we lost, you want to debit paid in capital from treasury stock. You want to debit it for $8,000. Okay, and then how much goes to treasury stock? Well, take the 8,000 shares and multiply by the original price you bought it at, which was the $15. Multiply by 15. Okay, that will give you $120,000. Okay, so you want to credit treasury stock for $120,000. Okay. And the last one here says, restate the entry for September 1st, assuming treasury shares were sold at $12 per share. So going back to the most recent one here, September 1st, now what happened if you sold them at $12 per share? Well, let's take a look here. First of all, always start with cash. How much cash did you receive? So you take the 8,000, multiply by the $12. Okay, so that'll be $96,000. So I'm going to start out by debiting cash for $96,000. Okay, the paid in capital from treasury stock has to stay the same at $20,000. Okay, so I'm going to debit that for $20,000. Okay. Now, how much treasury stock is worth? Again here, now I take 8,000 shares, multiply by $15. Okay, so that'll be $120,000. And again, you want to credit because you sold it. So you want to credit for $120,000. Now, notice here we still have a difference. And the difference, you want to debit retained earnings to decrease it. So we're going to debit retained earnings for the $4,000. You take the $120,000 minus the $96,000 minus the $20,000, you'll have a difference of $4,000. Okay. All right, class. I hope everyone's doing well. If you have any questions or comments, always feel free to contact me. All right, everybody. Take care.